Hello, everyone. Welcome to another KE Report webinar where we are featuring Great Bear Resources. I am joined right now by the President and CEO, Chris Taylor of Great Bear Resources. Now, a couple housekeeping notes initially. There are a couple tabs that should be on the right-hand side of your screen. There is a chat tab and a questions tab. The chat tab is live to everybody who is tuning in. So if you guys want to talk amongst yourselves, feel free to do that. I recommend going to the questions tab. That is where you can type in direct questions. Those will come directly to me, and I will interject these questions throughout Chris's presentation. You can also email me questions, which I have gotten a number of questions already, to fleck@kereport.com. From there, I will be monitoring my emails and this questions tab. If anybody is having any technical issues, I'll try to work through them with you, but it can be a little hard as Chris is presenting. There will also be a recording on the back end of this presentation that you all will have access to and that will get posted in a couple days' time. I like to give everyone who signed up the first ability and first access to this presentation. So Chris, enough from me. I'm going to throw it over to you. I will turn off both of our cameras so everybody can focus on the presentation. Might turn them back on later, but right now, everybody, thanks for tuning in. Chris, take us away, please.
How you doing today, Corey, by the way?
I'm doing pretty well. Hurt my back recently, but I'm getting over it.
Oh, that's not playing with kids or hopefully
Oh, yeah.
Serious?
Having a 2-year-old and being home all the time. You know, it's a different world that we're living in.
I have to say I am going just slightly, very slightly insane. You know, I'm in the office right now, so it's a bit of a break and nobody's around. So I'm totally socially distanced. But I mean, there's only so much Netflix series people can watch.
Oh, man, without sports, too, it's tough. It's a different world. Hopefully we get back to it sooner rather than later, but we'll see.
Well, at least with us, like I can chat with Bob and see how the exploration's going. That's what really puts a little bit of sunshine in my day. So, but otherwise, I would say probably about 15 hours of webinar screen shares that I've done over the last week and a half. So
there's a lot of at-home work going on. But hey, perfect for these kind of things. That's why I seem to be doing more and more of these, because people are tuning in and, well, we're all at home, so we need to get information somehow. This is just a little bit more interactive, which is nice. We already have some chats coming in, so yeah, I will monitor those throughout.
Okay, so I'll pop up my presentation right now. Just let it load. So let's go application, your entire screen application. Here we go.
Oh, yeah. Just to let everyone know, we are going to more or less cap this off at about an hour. So if we don't get to all of your questions, we will get to them, well, eventually. It just might happen in another presentation or another interview. So, Chris, I'm going to shut off my camera. I'm going to shut off your camera. Everybody is now going to be paying attention to the presentation.
Okay, great. And an hour works well for me. We're off to the special shareholder meeting for the royalty spinout right after this. So hence me wearing a business-looking outfit today. I had to pretty much dust my suit off. It's been hanging there. This one's been hanging in the closet for about a month and a half now. So I don't think it knew what was going on. Okay, so I put together a few slides to give everybody really an update about what's going on with Great Bear and why we're excited about what's happening here. One of the real pleasant backdrops of an unpleasant situation with the pandemic has been gold's reaction to all the money that's getting printed in the world right now. So oddly enough, like in terms of share price, Great Bear is just about back where it was before the COVID situation happened. And we're definitely, like I could say, based on investor inquiries, fund manager inquiries, I've been seeing that there is a lot of money that looks like it's getting primed to move into the gold space. And I don't think it's there yet, but it's certainly looking at gold way more closely than it has for a long time. So anyway, I'll go through the presentation here and we can chat a little bit more afterwards. So obviously I'm going to make some forward-looking statements as I discuss it. It's exploration. We have to look forward by default. So, you know, some of my thoughts on this are there's hundreds and hundreds of junior mining companies, which are really the ones that are going to do well in 2020 and going into 2021. And this comes down in my mind to companies with cash, companies that can continue working, because we know that not everybody can continue working these days, and companies with major discoveries. So I think Great Bear checks off all these boxes very handily. Right now, we've already spent, I would imagine, I think I have to talk to our CFO, but it's somewhere between $6 and $7 million on exploration already this year. We had a $21 million exploration program. We're about a third of the way through it, a little behind schedule because of COVID, but basically everything's on track. And that means that we still have hundreds of drill holes to drill this year, and we're fully funded to do that. So we have about $23 million in cash. We expect about another $5 million to come in from in-the-money warrants that are owned by us. Obviously, we're going to be carving out checks related to these, but there's some warrants left at the 70-cent level and some at the $1.75 level. Those are mostly owned now by us and Mr. Rob McEwen. Obviously, with the stock trading where it is, it's reasonable to expect that money coming in. Really, the breakdown in cash in the company now is about just under $10 million in hard dollars, what we call hard dollars, and the rest of it is flow-through money. And the warrants, when they come in, will be additional hard dollars. So we should finish this year's exploration program with roughly about $10 million in the bank, which is a really good position to be in. So we don't need to finance soon. And we're continuing to advance this LP fault discovery and our Dixie project at the same time. So we're still drilling. And this was a lot of back and forth, wondering what the regulations would yield, and then having to take a number of steps to keep our shareholders, in hand with new news. And more importantly, on staff, we have to keep everybody safe from getting sick. So basically, we're down to working with local area residents only. Like, we have some people that are driving in to site, and the rest of the people basically live in Red Lake that are working there in terms of the geologists and the geotechs. And what that means is that we're not basically importing personnel to the project, and that's helped keep everybody safe in Red Lake, including our people. And it helps us too that we have, say, like 3 different core shacks on site, so people are working in separate groups. I know, in a sense, we're all getting fatigued hearing about COVID-19 stuff all the time, but it is important that companies have taken steps to protect staff. So, obviously, I'm happy to touch on that. And then final point here is there's this very select group of companies in our industry, and I would count us among those, that have made major discoveries in the recent past. And, with what we're dealing with at the Dixie project, we've got the original Dixie Limb Zone, the discovery we made a couple of years back, the Hinge Zone, and now we've got the LP fault discovery that we made about 11 months ago now. I think the first news was just about 11 months ago on the drilling that we were doing on this big new target. So there are big discoveries. You could look at Silvercrest as another one that's done really well recently. Obviously, you have companies like OTCQX with their windfall discoveries and others. There's a handful of leading projects. I think these are all high on the radar screens of the industry at large, and also from the big mining company perspective.
So, Chris, in all fairness, you guys are the standout gold discovery. Yes, Silvercrest, that's a silver play, and that's a standout silver play. But in terms of being the standout gold discovery, how do you balance out the potential of M&A when people could argue that you are getting too expensive, or you could get too expensive?
Well, I mean, our job is really to get as expensive as possible. And, that's as a shareholder, that's what I really like to see. In a good gold environment, like we're seeing right now, like you haven't seen gold be picked up by the general market in a long, long time. When that happens, it's like trying to pump the Great Lakes in terms of incoming cash flow through like a garden hose. I mean, that's a ridiculous analogy, but there's so much money invested in the world, and so little of it is in the gold space, that when the capital inflows start, the valuations that you can see are really kind of extreme. So, getting expensive in our case, I think, is a good achievement, because you want to be a premium or a premier discovery. You want to attract the interest from big companies, but you don't want to do it too soon. So the balanced work that we have to do is keep drilling aggressively, which is why I'm really happy we have an active program right now. Drill aggressively, generate lots of results, build the value. And when gold is accelerating to, new levels, like the profitability that these large mining companies are making, it has to be crazy, because they're going to be looking at, I think they're, if you look at a group of, peer group of major producers, they're all at like 52-week highs or new 52-week highs, So these guys they're looking at really good cash flows. They're looking at share prices that are really high, and I think that makes them feel very powerful in terms of being able to pay for projects. So it's a good position for companies like us with major discoveries to be in. And I think we finally have the tailwinds of the gold market working with us instead of just headwinds working against us.
Fair enough. Chris, as you switch slides, just to further your point there, we did see that news come out of Newmont yesterday of increasing their dividend by 78%. So it shows how much these majors are building cash.
I hadn't even read that yet, but it was totally expecting to see this. And, the cash pools that these guys are sitting on are going to be ridiculous. I mean, that means that they're going to be mining aggressively, and they're going to be aggressively looking for feed to replace the gold that they're pulling out of the ground. So, there aren't that many major discoveries in the world. Like, we're not at a point where multi-million ounce gold discoveries are made every day. They're not made even every year. You have certain things, and I would argue Great Bear is one of them. These are, it sounds very promotional, but these are sort of decadal type discoveries. And, I'll run through some slides here in the deck, and you just try to compare apples to apples of the footprint of major mining projects and compare that against what we've found at the LP Fault, for instance, and we look very good in comparison. So anyway, without further ado, I'm on to the next slide now. So we're looking at kind of share performance, number of shares out, ownership, all these points. I mean, I speak to these many times, but one of the things that as a shareholder of Great Bear, and I've been involved with the company for 10 years, I've had to buy my positions in private placements, buy them in the market, alongside everybody else. I mean, we're looking at right now fully diluted. We're sitting at about 54.5 million shares. It's a way lower share count than most of the companies in our position with this type of discovery. And you're looking at about a $400 million market cap. So we've made good returns for investors, but this is early stage discovery. I mean, something like the LP, there's going to be hundreds more drill holes in it by the end of the year. And I'm telling you, based on the feedback that I'm getting from analysts, from investment funds, and all these different people that I speak to regularly, they are not yet familiar with the project. And as they begin to understand the scale and scope, I mean, it shows that there's a lot of potential upside in what we've got. And that's why, I was actually adding to my GBR shareholdings during the dip in the market recently, because, I was thinking, good God, people are selling Great Bear for $4. This is definitely something that I want to get involved with. So anyway, I think that there's a lot of upside from here, and the drill is going to show that over time.
Hey, Chris, kudos to you guys for keeping the share count, so maintained, since this is such a new company. But a couple questions that have come in regarding shareholders. Can you outline who the major shareholders are, maybe in terms of institutions or the other that you might have insights on?
Yep. So some of the people that are shareholders would be like Peter Brown, the Canaccord founder. He owns quite a few shares. It's several percent of the company. He would show up under other. Institutionally, you have groups like 1832 Funds, which is Rob Cohen's group out of Toronto. They're up to around 15% of Great Bear right now. I don't know the exact number, but it's somewhere in there. We have a number of family funds that are involved, and although I won't name the names, the entire back end of our last private placement about just under 5 months ago, that was all institutions. So we're seeing institutional buy-in from Europe, from the US, and domestically here in Canada, as people begin to understand the story and where it could go to. The level of interest has been expanding. So we're down to about 65% retail ownership. And of course, management is still at around 10% roughly as well.
Okay, one more quick point on institutional accumulation of shares right now. As they acquire more, which it does seem like they're going down that road, are you worried or cognizant of some sort of a stealth takeover of the company?
No, part of the process, you can't really give out details in these kind of situations, but I'll just speak in generalities. One of the normal things that a company in our state of affairs would do is that, the big companies and others that would be potentially interested in taking over a major discovery, usually they want to see the data. Usually there's some sort of NDA agreement. And usually there's provisions that prevent sort of that type of activity within those agreements. So without speaking in detail, that's just the normal, sort of event that goes through. We've also seen, from the institutional point, we were added to, for instance, the VanEck GDXJ about a month ago, and they sucked up about 2.5 million shares out of the market as well. So if you look at the volume spikes on our share chart on the left, you could see the initial one was this was the Hinge Zone discovery back in September of 2018, a year and a half ago, and then you go through about a year-long period, or not even a year, of dealing with that, and then you end up with around May of last year, we had the LP fault discovery, and of course, because that is just a game changer in terms of size and everything, you can see the rest of the share performance there. But the volume spikes were at the Hinge Zone discovery back in September, and here. Basically at the end of March, you can see when VanEck did some buying there. That was that chunk of about 2.5 million shares that were bought out of the market there. More institutional purchase.
Sounds good. Let's move on a bit more to the project now and what's on tap.
Yeah. Okay. So what we've made here at Dixie is really one of the biggest gold discoveries in Canada. If you look at the footprint of the zone, we put in test holes across 11 kilometers of this LP fault, and I believe all of the holes hit gold. There might have been one dry hole. I'd have to talk to Bob again, but I was looking at the data the other day out of I got to keep my head in the public domain here, but around about 100 drill holes, probably one across the 11 kilometers just only had a little bit of gold, sort of some really anomalous stuff. But you see a gold system here, which is wide open at an 11 kilometer strike length, and we're drilling off right now a 5 kilometer long panel in the middle of it, roughly, which is about 300 holes. Like, it's 5 kilometers long and 500 meters deep. If you think about that, that's a 2.5 square kilometer target that we're doing pretty much 75 meters space definition drilling on right now. Like, think about the size of that. Like, I know it's basically a vertical sheet that goes right to surface, but sort of imagine folding your laptop that you're watching this on in half, tilting it up on its side, and now your laptop is a target that's 5 kilometers long. And now you're drilling off basically a sheet over from the top part of it down, 500 meters. So a fraction of its strike length. And then just the size of it, it just blows your mind, right? So there really aren't a lot of comparables that have that kind of footprint. So, and within that, you're looking at two styles of mineralization. The big one in the fault, this LP fault, is really like nothing else in the Red Lake area. It's more like the Hemlo discovery, which, I guess, Hemlo, the only disadvantage talking about Hemlo is that it's a discovery from the early 1980s. So a lot of people might not remember it, but it's a 23 million ounce producer that's operated by Barrick now, and 3 separate mines were consolidated into one. And certainly amongst the sort of experienced geologist crowd in Canada, a lot of people would be familiar with it and would be familiar with, the kind of results that thing had produced. So we have something that looks like that in the middle of the property. And then we have Red Lake style gold veins that are around that, these basically satellitic zones around the central fault. And right now, and this is quite interesting, right now, until Osisko gets going again with Windfall, 30 rigs or whatever they're up to, it's an incredible number of drill rigs. We are currently the biggest active drill program in Canada until they get going again, because with 110,000 meters and 300 odd holes to drill this year, that's pretty much the biggest. So once Quebec opens up to exploration again, they'll surpass us for size, but we'd be like number 2. In the list. So there was a period here because of COVID where, because we were actively drilling, we were actually number 1. So that's quite interesting as well. And like everybody knows, there won't be this isn't new information, but this is a new discovery. So this isn't like the LP fault wasn't something that was known beforehand. There were a couple drill holes on the project that had grazed into it, and they just had never been assayed or analyzed. So people didn't know it was there. But, there was nothing in this target until we started drilling it about a year ago, and now there's something like round about 100 holes that we've put into it over 11 kilometers, and we're drilling off this huge grid panel. So people are asking, well, when are you going to deliver a resource? Well, that just takes a while because the thing is so big. If this was a normal mineral discovery, like most mines, most gold zones in the world that end up being discrete bodies are kind of 200, 300 meters in strike length. They're not 4 or 5 kilometers in strike length. So you can just think, even with multiple rigs drilling at this thing all year, it just takes a while to drill all that. So we should be on track to drill that first 300 holes. That'll be done by about Christmas, provided COVID doesn't shut everything down. If everything goes as it currently is, we should be done that work by about Christmas. So we should be able to deliver an initial resource sometime next year.
I know a lot of people are waiting for that. Just a quick question here. How many drills do you currently have turning?
We're going with 3 right now. That was, there's 2 parked because we stopped flying people in from elsewhere. We were always using, labor from locally sourced labor and fly-in labor. And we had 5 rigs going, but we've been able to maintain 3 of those by, keeping everybody, safe with our health provisions that we've got in place, all these new protocols. And that means that just using local staff, there's enough people to keep 3 of the 5 going. And that's enough to finish the program. We probably would have been done drilling. Without COVID, this program would have been done by about Halloween. With COVID, it's going to be done by about Christmas. And that's just because we're operating. I'm assuming that, say, work restrictions are going to be in place for the rest of the year. Maybe they won't. If they open up earlier, we'll bring the other rigs back online. But assuming that we can't, then you'll still be done the drill program by Christmas.
Perfect. Let's move on here.
Okay, so the project's 100% owned. A little bit of history there. We staked most of it ourselves to control this geological target. We bought a corner of the project, which had the Dixie Limb and the hinge zones on it, from a private vendor and from Newmont. The total purchase cost on that was a couple $100,000. Obviously, nobody knew about the LP fault, and nobody knew about the continuity of the Dixie Limb, and nobody knew about the hinge zone. So there was a lot of extra value that we've added to this, to the tune of about $400 million of value in the last couple of years. And that's really just a function of people didn't understand the geology, and they didn't know, nobody knew what we were buying. We just had geological theories, and fortunately for us, they've really panned out. We are spinning out a royalty to our shareholders shortly, provided it gets improved by shareholders at the meeting in less than an hour here. So basically, that means if that's all approved by shareholders, then the shareholders will receive shares in a spin-out company that controls a 2% royalty on this deposit or on this project. And what that means for us is that we're really doing research, and we did a lot of research on it. We looked at a lot of comparable projects. There was really nothing out there with this kind of potential that didn't already have a royalty on it. And speaking to analysts, like just by default, when they're researching a project for the first time, they always assume that major discoveries already have a royalty on it, because it's never the first company that owns a project that makes the discovery. And one of the ways you protect value is by putting a royalty on something when you sell a project to somebody else. So an industry average would be somewhere 2 to 4%, probably in that range. So they sort of just assume 2% is already on it. So it's because we had no royalties on this project early on, and we think that those could be worth a lot in the future. Well, we don't know yet, but it looks very good. We decided we wanted our shareholders to benefit from that. So that's why we're going ahead with a spin out at this stage. The other thing is that people might not be aware of is that other companies that have gone down the route of spinning out royalties, this would include like the Malartic discovery going over, royalties going over to Osisko royalties. I mean, and other companies, so there's a number of them that we've spoken with, but it was a real pain in the bottom to negotiate a royalty spin out on the point of a transaction, like of these deposits or companies being taken over. So getting it out of the way early on is one of the cleanest ways to do it. And we saw an opportunity to do that at an early stage and protect our shareholder value at the same time. So we just want to make sure, all things being considered, this has been a 10-year process for me, for instance, with Great Bear. I want to make sure it's the Great Bear shareholders that benefit from the future potential value of that royalty.
Now, Chris, there's a bunch of questions that came in on the back of this royalty. You and I will probably record a dedicated interview on it. But is this royalty, is the strategy eventually to get it listed? Can you share any information on that?
It could be, but really the important thing is to protect it first. And if you list it, listing costs are not too bad, but the burn rates on a listed company are a lot higher than on a private company or a non-listed company. So initially, this is going to be a publicly distributed non-listed company. The operation, like it'll be a reporting issuer, so like it'll have financial statements and everything else, but it'll have lower fee structure than it would if it were actually listed. So that's a possibility over the long term. The main thing is to get it into our hands, protect it, and make sure that it's not burning through capital while it's protecting the value of that royalty.
Okay. So you're really just keeping this value within the company, but eventually having the option of either listing it or, who knows, doing really anything else, but you're not pigeonholing yourself right now.
We're keeping the value within the pool of shareholders, put it that way. Yeah.
Okay.
So I can talk about that more later, but we're going to run out of time basically. So I'll just run through a few things. So everybody knows the project is located just outside of Red Lake. We've even had shareholders drive right up to the drill. I would encourage you not to do that. It's really not safe to go onto an active industrial project, but you could, if you had your Toyota Corolla and you wanted to drive up from Thunder Bay, you could do it. Just please don't. But the bottom line is it's literally right off the side of the highway. The power lines run over the project that feed the town and all the other mines in the area. So we're really not misrepresenting that this is easy to operate and cheaper to operate and easy to get to. The other thing is this is a really unusual combination of near surface high grade gold. You don't generally see that in the area. A lot of the exploration that's being done is down to great depth. Mine exploration or mine development is going down to great depths as well. Here, the gold that we're drilling, if you look at our tables of results, goes right to surface basically. So, and the next slide just shows a picture of the project. So you can see effectively Red Lake in the distance there, all the lakes up there, and most of our project is just dry. And this is a drone photo we took a couple years back. It shows the commercial gravel open pit operations on the north part of the project. A lot of those trees are gone. It's being heavily logged by a forestry company right now. So it's mostly a big clear cut off the side of the highway would be the best way to describe it. The reason there's no water is because there's a gravel deposit over most of the project, anywhere from a couple meters thick where we're drilling, sometimes 5, sometimes 10 meters thick of gravel, or like this northern part of the project, which isn't near any of the gold targets that we're working on right now. You've probably got over 20 meters of gravel there based on the size of those pits. But that's the reason nothing was found here before. You just don't see the bedrock like you do in the Red Lake area. Hence, the gold is all still in the ground at Dixie. And this is why the gold's there. So I'm sure, again, a lot of people will have seen this. We're not going to touch on it too much, but 2 big structures were found by a government seismic survey in this area. One of them is located adjacent to the Red Lake mine complex. So you've got about 25 million ounces of gold produced out of that. The other one is the Dixie project. And we staked the entire strike extent of the greenstone belts, the Dixie greenstone belt with that fault. And that's the LP fault. We're drilling that right now. Most of the gold we're talking about today comes right out of that fault or right out of veins and stuff that are developed adjacent to that fault. And then this is an image we haven't seen in a long time. I popped this in before the discussion today. The geology on it's a bit outdated. We've got some new maps out, but this shows the drill section information across the LP fault. And that we haven't talked about in a long time. But you can see when you see a drill section number, it's basically based on a grid that's in this case, however many meters apart. So that's real scale. So if you can see some of the numbers, say like on the bottom right, it's 11,000. On the top left, it's 29,800. So that's 19.8 kilometers difference between those 2 points. And those are reference grid lines that are every, 200 meters apart. So to give an example of scale, the red box is the area where we're doing this grid drill program right now. And we used to have their stars on the map here showing different zone names. They basically all merged together into sort of continuous mineralized slab, more or less, is what we're seeing in the drilling. We've been showing that, repeatedly. And adjacent to that, the Dixie Limb and the hinge zones, which are really satellitic occurrences around the big central feature. So just keep that in mind, that scale. The red box is around where we're drilling off this grid program right now.
And just a quick note, the focus is going to stay within this 5 kilometers for right now, correct?
Yeah, I mean, looking at this, like we drilled out past, if you look at the red box, it's back up on the screen. We drilled east past where that LP fault label is into the area where there's sort of a kink in the yellow. And, we got gold in basically all the holes along 11 kilometers there. I think the gold mineralization is at its best and most continuous in that central area because it's around a big deflection in the fault zone. If you look at like Hemlo as a comparison, the best gold there is also developed at a big inflection in the fault zone. The difference is the Hemlo system is about 2.6 to 3 kilometers around the deflection. Ours is about 5. So in any case, yeah, we're going to focus here because because it's already so big, it's already bigger than the majority of comparable big discoveries. People don't just want to see us drill holes willy-nilly across the project and show that we already have an 11-kilometer gold system. It doesn't need to be bigger than that. What they want to see is how it ties together, and that's why the focus has been on grid drilling that 5K. And I have a lot of calls about this with very sophisticated mining guys, and everybody just struggles to get their head around the absolute scope of the thing because there aren't a lot of comparables. So you're looking at a system that doesn't have a lot of apples to apples comparisons you can make. The ones that you can make are big apples, right? So we'll talk about that in a sec as well. So this is the LP fault gold. That's what it looks like. The key part here that you're looking at is disseminated high-grade gold going to surface. It's sheet-like, not shoot-like. The difference there is really in geometry. Because you're in a big fault zone and everything has been deformed and sheared into planar features. You're not looking at predominantly, this isn't like pencil-like geometries of gold, which is what people are used to seeing. It's something that looks like a tube. Usually like, if you look at something like Osisko's Windfall, you have a bunch of these sort of tubular trends that go down from surface on about a 45, 50 degree angle down to whatever depth they go to. Sometimes they're vertical tubes. Here, because you're in a big fault zone, you see more of a sheet-like type of geometry, which means planar. And the reason that we keep hitting so much is because whatever the gold system was before all that deformation, it's like you took a bulldozer to it and turned whatever the original geometry is into planar, extensive features. And that's why section after section, as we keep drilling, we keep getting the gold mineralization. And the important part here is that it's predictable and it goes to surface. There may be intersection features between deformation within that zone that cause additional enhancements that go down at sort of these vertical type plunges. But the bottom line is you can put a drill hole on it anywhere along that 4 or 5 kilometers. And, we've got, I think in public data now, something like around 90 holes that are disclosed, and they all hit mineralization. So it gives you a feel for how the continuity goes. This is a lot like Hemlo. So Hemlo was important in the sense that it was, this sort of continuity. You could hit it again and again along strike once you were in these ore bodies. And it had this sort of panel-like geometry that was predictable, and it's why it was such an interesting discovery. So some of the numbers that we look at here, these are some of the highlight numbers that I just selected to go over. Obviously, these are great holes. So like BR65, you'd have in the middle of the zone of deformation associated with that fault, like 8.7 meters, 48 grams. It's incredible, but lots of zones. Like the key here looking at it is there's wide intervals of mineralization. The altered zone here with gold in it, like you're looking at multiple zones across, say, starting from 145 meters to 383 meters. So that's, basically 240 meters of zone. And you're looking at drill holes that are put in on about a 45, 50 degree angle. So these drill holes are designed to make the zones as skinny as possible. So they're not going right down it. They're going across it to make it as skinny as you can possibly make it. So we need a little bit more data, but my guess looking at the structural data is you're looking at about 80 to 90% of true width here. probably 85 to 90% of true width. And in that sense, you've got the widths and the grades that you're seeing are pretty close to what they actually are. They're not inflated by, drill directional choice. So you're also looking, because they're angled, think about the depth here, like 145 meters on the from, 148 meters on the to at the top of the column. Because the hole's on an angle, if you want to think how far that is from surface, you've got to reduce it by about a third to think about the vertical depth. So that's the first one is just below 100 meters vertically from surface. This is a function of where the drill collar is in relation to the zone, because the gold's going to go basically right to surface under those gravels. And the two depths, like, you can see that all this stuff is near surface mineralization, especially when you consider, like, neighbors of ours that are going into production. The beginning of one of the zones that they're talking about producing on is about 1.6 kilometers vertically down. So compared to that, or the Red Lake mine, which mines down to 2.5 kilometers, 2,500 meters vertical depth, this is literally just scratching the surface. The other hole there, DNW 11, 58 meters to 60 meters, again, a 50 odd degree angle drill hole. That's about 30 meters vertical depth. Those are right on surface. So anyway, proceeding, you have those numbers, or some of these, like the drill fences that now on this slide are like nearly 2 kilometers away from the last one, same rocks, same mineralization. So again, think about the vertical depths and the widths on the system here. You have from 108 meters BR 101 to 218 meters, and there is an envelope of lower grade mineralization around that, which is very extensive. We just don't provide it in highlight results. But 108 to 218, so over 100 meters, and you have 4 different gold zones, the central one of which is, again, very shallow, just below 100 meters, where you start to intersect it with this drill hole because it's on an angle. 63 meters of 3.6 grams, including a few meters of 1.5 ounces or half a meter of a few ounces. And look at the other intervals that are around it. BR 20, again, it's about 150 meters, I believe, away from 101, if memory serves. Same zone, same kind of mineralization. Very shallow, starting 38 meters depth. I mean, because it's on an angle, this thing is basically starting below just at the gravel cover, here. So you're looking at basically 50 odd meters of over 4 grams right from surface. That's really rare. In the industry, wherever you go, to be able to develop significant widths of multi-gram mineralization, people would call that high grade at most other companies, including like 1.5 meters of, 3 ounces over 3.5 ounces, and then multiple zones going down. I mean, this has really been just an incredible discovery for us.
Well, and that's been one of the biggest developments of the story too. It ties in with this slide you just pulled up, is tying together these different, what you initially thought were deposits, into the potential of one major deposit.
That's right. And you can see, we didn't dare to dream, would probably be the way to describe it. When we began drilling the LP, we'd step out 1 kilometer and we'd hit more gold, and step out 1 kilometer and hit more gold, and step out 1 kilometer and hit more gold. And then we'd go halfway back in between and hit gold, and then halfway back in between that and hit gold. And then, we've done drill fences that are as close as 25 meters. They see the continuity. We've done drill fences, like, as you've seen, we did a loose fence over 11 kilometers. But this central area, the important part here is looking at the long section that's in front of you. This is an updated long section. So you can see, I'll just highlight what the dots mean. So, I mean, that's pink dots there. Those are over 20 gram per ton intercepts. You look at surface, like look at the surface position relative to those intercepts, and look at the strike length of where we've had those intercepts. So the pink dots are over 20 grams. The reds are 5 to 10 grams, still high grade mineralization. The greens are 3 to 5 grams, moderate grades, and the blues are 1 to 3 grams. So something like, Agnico's Malarctic pit would fit into about 3/4 of the strike length of this thing. That's the biggest open pit in Canada, and it's about 1 gram per ton. So the Malarctic, most of the mineralization you see there, based on what's in that deposit, would be like in the blue dots and the green dots. There wouldn't be very much in the red and the pink at all. Here you have exceptional amounts of high-grade mineralization that we've drilled it. It's not me talking about it. It's us showing assays over a big strike length, and the continuity has been excellent. So, the very worst drill section that we had is still populated with those blue dots. If you look at that between, you can see some numbers on here, 21150 and 22375. There's about a 100-meter section where it's mostly like kind of gram material. And when you look at that, it's, that's about as bad as it gets. And then it's about as good as it gets that we've seen so far in what we used to call the Oro area. And it probably even where you're looking at mineralization, my guess, looking at the structural data where you see the worst section, is the gold is probably just down below the level that we've drilled it, because consistently, or in the majority of the cases, it's not in every case, but the majority of the drill fences, you can see there's a lot of them at this point. The deeper we've gone in the system, the wider the zone has gotten and the more zones that we've got. So I would imagine that what you're looking at, even on sections where you don't see a lot of high grade near surface, is it might be present down below that. And you can see, looking at the way the dots are distributed, your eye tells you that. You don't have to be a structural geologist to understand that you just need to go in and drill down below that for a very attractive type of target. So anyway, there's work that's going on in that realm as well.
Hey, Chris, clearly a lot of people are thinking about this. I don't want to take up too much more time because we do need to keep going, but there have been a lot of questions that came in regarding deeper drill holes, anything 500 meters, greater than 500 meters. Have you drilled holes down to this deep, and what is the strategy for attacking this deeper material?
Well, look at these cross sections in front of you, and we'll talk about the deep drilling here as we talk about continuity, because it's all hand in hand. Like, deep drilling is just vertical continuity, whereas lateral drilling is, a long strike continuity. So look at these sections. So 22375 on the left, that's around the Bear Ramini discovery area, the first hole that we put in, DNW 11. And you can see in this area, you can see the width of the gold system is about just under 200 meters. You can see it's getting wider as it goes deeper as well. Look at the scale bar on the bottom of the image. Before I go further, just as a reference, it always bears to repeat it. The average width of a gold vein in the Red Lake area is something like about 2 to 3 meters, or half a meter to 3 meters, say. So the average width of a gold vein, which is successfully produced in this area, like 30 million ounces of gold, is just, it doesn't even show up, relative to what we're drilling here, in terms of the width of the system. But anyway, look at the left image. There's about 1.7 kilometers of strike length that we're showing here. So the left is the Bear Ramini area. The middle is what we used to call the gap zone. It was a bit of a tongue-in-cheek joke because there was no real gap. The zone just kept going through that. And the right is, I believe that's Oro area there previously. But it's the same rocks. Look at the color coding on the sections. Same rocks, same mineralization, same structural fabrics that you see section to section to section. And some areas, like obviously it'll be a bit skinnier in areas, a bit wider in areas. And generally what you're looking at here is, as you go down, you get multiple zones. The total width of the system tends to be larger. But look at some of the numbers that you're generating on these sections. So in terms of the deep drilling here, think about the scale of what you're looking at here, and think about that in the scale of what we have and what the other guys are mining in the area. So take the middle section, gap, just because it's, it's easy to look at it, right? So you're looking at something, look at the scale bars on the left. 400 to 200, 200 to 0. That's a 400-meter vertical extent where all the drill holes have hit the same thing right from surface down to depth. Now, I don't know what anything does deeper than that, but I would be very surprised if the gold doesn't continue going deeper. And you're drilling a planar feature. So the best guess here would be just put another hole, another 100 meters down below BR 121, and watch that distribution of grade. It's going to pinch and swell as it goes along strike and at depth, but it's been so consistent that you're hitting the same system. Same thing with all these sections, you're looking at it. Some basically pinching and swelling as it goes down to depth and along strike, but the system is just consistent. And I say this, and it's not meant to be offensive in any way, but at times this has been about as difficult as shooting the side of a barn. So, it sounds bad, and there's a lot of thinking, and we don't cut corners. Like we do 41 element ICP, we do complete hole assays, we do structural data collection and the whole thing. The thing is, you're drilling a grid, just drill the grid and show the continuity that way. Once you're done drilling over the 400 or 500 meter initial panel, you should be in a good position to generate like an inferred type resource. But if it's this continuous over hundreds of meters of what you're seeing from the surface, I mean, what's the chance that you're also going to hit it deeper? It's very good. So are we doing deeper drilling? Yes, of course we are. What ideally I'd like to show as a CEO of the company, somebody that wants to show the growth and the progression of the asset, is effectively over time drill off that initial resource panel down to about 500 meters, and then already have deeper drill holes hitting the system at much deeper than that, showing that continuity down to greater depths. I think personally, having looked at a lot of parallel stories, I think what you'll see is the valuation of the company will be whatever the value of that initial kind of resource is, plus a proportion of the value expanded. Say if you drilled it down to 500 meters, but you hit it at 1,000, you might not get double the value that you do to 500 meters, but you'll get 1 plus X. You'll get extra value for it. So of course we have deeper drilling planned as well.
Okay, thanks, Chris. Let's move on here. We are starting to run out of time. I know that you have to run, so I'm going to sit on a lot more of these questions, and Chris and I will organize how to get them answered, but please keep them coming, everybody.
So you look at this just very quickly. This is the cross section. I'll just touch on this a little bit, but the DHZ and the DL veins beside the big, LP fault zone. This is an older section here. This is the important part, and I don't want people to forget when we're looking at this. I'm going to go to the next slide quickly. We also have the hinge zone mineralization and the Dixie limb beside that. We're just going to talk about the hinge for a second, but this is high grade gold in quartz veins. So you can see it looks different. Here's the previous rock. That's what the LP fault typically looks like, no quartz veins. This is what the Dixie limb and the hinge look like. That's all quartz in the background, right? So you're looking at high-grade gold in quartz veins going down to whatever depth. Now, these are also very good drill results. So I don't want people to forget that these are here. They are satellitic. They don't have the same total volume, multi-kilometer, it's not a 20-kilometer long fault system, but it is a very significant discovery, a lot more like what others have mined successfully in Red Lake. Also very good numbers. I took this table out of a presentation we had about a year ago now. So you can see, you easily get multiple veins as well, a couple meters of very good mineralization, including cores, really high grade mineralization as well. So very similar to the high grade that you see in the LP fault. And this is what it looks like in 3 dimensions. So, Bob put these figures together a while ago, but it shows you the cross section on the left shows you basically a swarm of veins in the hinge zone and a very predictable plane of gold mineralization in veins on the Dixie limb side beside that. And this is what it looks like in 3 dimensions. You can see the cubes there. I would just encourage people to look at that and get their head around it again. It's just good to not forget that we also have these excellent Red Lake style zones right beside the big LP fault discovery. And this is just the last bit that I'll talk on is size. This is apples to apples. Like, how do we compare? There's nothing exactly like the LP fault out there, but again, these kind of comparisons can be useful for just trying to get your head around size. So here's Malartic. This is the big mama of Canadian open pit deposits, 12 million ounces, nearly a $4 billion purchase price. I mean, it's almost impossible to get your head around that value. That would be like, for all intents and purposes, if Great Bear is about a $400 million valuation at the moment, this deposit would have been worth 10 times as much as the current Great Bear valuation when it was bought. So it pays to look at something like this and just think about compare scale. So
especially when you're comparing it to something 10 times the value, Chris.
Okay. We don't want to get too promotional, but you kind of have to do apples to apples, right? For size. And, on the left, you've got the long section that I just showed you with the LP fault. We're drilling off a 5-kilometer grid on that thing. On the right, you can see there's a 3.5-kilometer long open pit at Malartic of about 1 gram per ton, 12 million ounces, and a 6-kilometer total deposit. The total zone length that we've already drilled at Great Bear is about 11 kilometers. Remember, we have gold-bearing drill holes. The best ones are definitely around this 4 to 5 kilometer central area, but we have a gold system that's 11 kilometers long. in terms of scale. I don't know. You're going to have to do denser drilling on that remaining several kilometers to try to figure out, do you have plunging ore zones there? I don't know yet. We haven't drilled enough on it. But the point is, it's a really big system. You saw that in the seismic data. You saw the scale of the big fault that we're drilling. So if you put it side by side with Malartic, you can see that they had an open pit, which would be smaller than the zone that we've got drilled off, that central sort of grid panel, but still very enormous. And they had panels of mineralization that used to be mined underground. So there was about 5 million ounces of about 4.5 grams that they've drilled underground in these sheets that extend. And you can see that just generally that deposit, going to the next slide, there's you're looking at the red square or rectangle. We're drilling currently the grid at the LP fault, and on the right, the same rectangle over basically the Malartic pit. And you can see Malartic, generally the gold system plunges sort of shallowly to the right there, and at us it basically goes straight down. So just to show you, an apples to apples comparison, I can't tell you, right away that we have whatever it is, like nearly 20 million ounces of gold, but the physical footprint of the systems is very, very comparable. So, and I can't tell you, that we're worth $4 billion, but I mean, the drilling is going to have to be something that ultimately drives the value. Yeah. And then, of course, Hemlo, this is the most geologically similar. So the important point here is that 3 different companies owned it. I don't even know what the total value of the 3 different mines was. It was a great deal. One of our shareholders, Peter Brown, was talking about how he helped finance this back in the early 1980s. And this was the play, the discovery that generated at that time the biggest staking rush in Canadian history, and also brought the gold market out of the doldrums into an active phase, was based on this discovery here. And the important thing about Hemlo, and we'll go to the next page, is again, on an apples to apples sort of comparison point, most of the gold at Hemlo was mined over about a 2.6 to 3 kilometer strike length. So out of the 20 odd million ounces, 23 million ounces, about 20 million ounces were mined out of about a 3 kilometer strike length. So, they had, because of the big deformation zone that they had predictability, they had sheet-like gold geometries, similar felsic volcanic host rocks that we have at the LP fault, similar disseminated sheet-like gold mineralization, and predictability on the drilling there within the red blob that you're looking at. What they did not have was as much high-grade mineralization in terms of hits in the drill near surface. Like you're looking with us, all that, those pink dots, just focus on those. Those are going basically right to surface. At Hemlo, there's very little high-grade gold mineralization going right to surface. It's mostly lower grade at surface. This is why it took years for companies to really tag into this. They had to start drilling below the 500-meter level to really start defining it. So anyway, this is the closest geological analog. It's a big system. We're also a big system. It just shows you that the potential value, I don't know what it is in the Hemlo case. Barrick owns it right now. They consolidated the entire thing, but it certainly bodes well for what we might have at the LP fault, and excluding the Dixieland and the Hinge Zone as well.
Well, that's the other thing, excluding all the other exploration that could be done.
Yeah. So just to recap and get out of everybody's ears here, we're drilling one of the biggest drill programs in Canada. The analogs to this are big kind of tier 1 producers. It's too early for us to say that yet, but the drilling, it looks like it's leaning that way very heavily. And the gold sector, finally, instead of constant headwinds and the whole world just wanting to buy as much Apple or whatever as they possibly can get, finally there's a bid on gold. So we're finally getting into tailwinds and an active gold cycle. And I think really what that equates to is that at the end of the day, the gold producers are going to be feeling very rich in the midst of all this. And I think there's going to be a really active M&A cycle. And I think, talking my own book here, but I think companies like Great Bear that have unique, big, discoveries are going to be on the top of that list. And that's it, Corey. That's all I want to say right now.
Hey, Chris, I think we have covered a lot here, and your last comment ties in very much to a chat that just came in that said, is it possible Great Bear gets bought out before the true value is established? That's tough to answer because we don't know what this true value is. And honestly, the best projects do get acquired before the true value is truly really ever understood. But hey, you guys have built so much value in just a matter of a couple of years. It's been a very impressive story, and it's been very fun to follow along with. So, Chris, we are going to wrap it up here. Again, we didn't get to all the questions. I'm going to follow up with Chris and his team and put together an interview, maybe either some other media formats to get those questions answered. Keep them coming to me, please. fleck@kereport.com. I can either keep them for myself or send them on to the company. Everybody, thanks for joining us. It was a very active question and chat blog that we had going there. Chris, thanks again for your time. Have a great rest of your day. This was very informational.
Off to the special shareholder meeting. So the busyness in my day is just getting started. Thanks, Corey.
Good on you, buddy. Bye-bye.
Okay, see you later.